Hello, my name is Stacey Mankoff, and I'd like to welcome you to another edition of the Bellringer. As you know, the After the Bell events are on pause for a bit. So in lieu of being in person, what I am delighted to do is have one-on-one chats. And today's Bellringer, we have Marc Chandler, who is the Chief Market Strategist at Bannockburn Global Forex. Prior to this, Marc was global head of currency strategy at Brown Brothers Harriman and also was chief currency strategist for HSBC USA and Mellon Bank. Marc is a prolific writer. He has a great blog, and he's a regular guest on many outlets, including CNBC, and we're absolutely delighted to have him. So welcome, Marc.
Thank you. Thank you for inviting me.
And I didn't know if you wanted to add anything to that?
No, that's
Oh,
good.
good.
I like that. Short and sweet.
So anyway, as you know, we've had a presidential election, and I wanted to get your take on certain things. And the first thing I'd like to start at is, what do you think should be job one in regards to the economy and all that for the administration when it comes in January?
Yeah, I think that, the economy is just recovering from this COVID shock. And I think the most important issue facing the economy is really the disparity of wealth and income. And so when people talk about what kind of bottom of an economy we should have, whether it's going to be a V-shaped or a U-shaped, I think that the incoming administration should be aware of the K-shaped bottom, where there's winners and losers. And so, for example, one of the things that Biden has recommended or should proposed is a $20 billion like rural like Wi-Fi. And this is really an important issue, I think, for both economics and politics. With the disparity, you look at the election outcome, and I think that President Trump picked up something like he had a 35 or 40% majority in the most rural districts, the least urbanized parts of the country. And so I think in order to begin repairing that divergence, we need to really address some of those needs. And so I think that's what I'd be keeping in mind is just the winners and losers, and we need to close that gap to preserve democracy.
Okay. You said that, the shock of the COVID is over, but as you know, there's been resurgence right now. And there seems to be such a dissonance in the markets. I mean, today's report that said that the retail market is going to be hit, but the manufacturing seems to be on a rise. And then, as you know, the markets in general, quite a few of the markets have been really going up, while economically people are tightening. So are we heading for a real crunch? I mean, why this dissonance?
Yeah, it's an amazing thing, huh? As the stock market reaches record highs, and we still have large parts of our country who are in pain. And as you say, we have a COVID resurgence where the 7-day average of the virus is rising in all 50 states. And yet the stock market is doing very well this year when everything's said and done. And so what's the source of that gap, that dissonance between Main Street and Wall Street? I think a couple of things. One is that I think many people think that the stock market, or the markets in general, are like just a big legalized gambling casino. But the markets do more than just that. Partly they anticipate what's going to happen in the future. So the market's not responding to, it's sort of like when we're driving. When we teach people to drive, we say, don't aim for that pavement right in front of the car, but aim high in your steering. And I think that's what the market tries to do too, anticipate what's going to happen, not what is happening today. But also the dissonance, I think, is that when it turns out that we think about America as being an equity culture, and yet less than half of American households own stock. In order to get a significant amount of stock, you have to have say family income over $100,000. And so I think that that this concentration of wealth and income is also reflected in who's benefiting from a rising stock market and who's got the savings to buy more stocks. But at the same time, I think that the COVID has, what it's done again in the stock market, winners and losers, and those stocks that have sort of benefit from people staying at home. Gaming, the FANGs, outdoor, some slight like backdoor things, gardening,
Right.
uh,
Well, and like Zoom did really
Zoom.
well.
Yeah,
Hmm.
and so I think that and the way these markets are, the way that a lot of these indexes are put together,
Hmm.
really reward the big caps. So if Apple is the largest company, then
Hmm.
what it does tends to be have a greater say, a greater weight than a greater weight in the index, I should say. So what we really look for is like breadth, and I think part of it is the way these stock indexes are put together. It doesn't really reflect the lack of breadth in the stock market. That most of the gains could be accounted for by a couple handful of stocks, as
Right.
opposed to the few thousands that really exist.
Mhm. Well, what was very interesting is obviously the work from home stocks were doing very well for a while. But as soon as the news about the vaccines, both from Pfizer and I just blanked on what the Moderna's, those stocks started to go down, including Clorox, obviously for the So, where do you see, with all this, where do you see some of the growth areas in the next year or so?
Yeah, no, I think that's a good point. Is that investors are fickle, and one day we like the things, the next day we don't. And
Uh-huh.
so there does seem to be a rotation going on, and people are looking forward. And
Mhm.
like you say, we've got a couple of tough months ahead of us as the vaccine surges. But as we look down 6 months down the road or 9 months down the road, I think people are
Right,
really looking at the post-COVID economies. And
right.
I think that a couple of things seem to resonate. One is that whether it's Make America Great Again, or Biden's Build It Better or Build It Back
Mhm,
Better. What this
mhm,
ultimately is import substitution strategies that should help U.S. manufacturers.
mhm.
And as we, before the COVID, the U.S. was importing something like 95% of our penicillin from China. It makes no
Interesting.
sense. We
Right.
need to produce our own medical supplies, our own medical
Mhm,
devices, just as much as we want to be energy self-sufficient, food
mhm,
self-sufficient. Excuse me.
mhm, mhm,
Excuse me, we also want to be medical devices. And the same thing with rare earths. These are these little metals that make up that are the powerful magnets that
mhm,
are in a modern technology, both civilian as well as military. It
mhm,
makes no sense that we have to import them from China. We have the
mhm,
capability to do it ourselves, but
mhm,
we care more about the environment. It's the same
mhm,
reason why New York doesn't allow fracking, even though it has the geological formations. And so I think that manufacturing at home becomes
mhm,
more of an opportunities. I think that there is something to this green, that thinking about the future, thinking that there's a race, not a race to the moon as it was when we were kids, maybe, but
Well, it's a race to Mars or something right
the race
now.
to Mars.
Yes.
I wonder if it's a race to a carbon-free economy, to a
Uh-huh.
zero carbon footprint. And where is the U.S. in this race? And this is the technology, whether it's maybe it's not even electric cars, maybe it's hydrogen cars, or there's something more out there. And I think that when you're thinking about what to invest in, of course, the
Right.
best thing to do is do your homework. And as
Mhm,
value investors, it's always trying to buy things below what you think their fair value is. So it's not a
mhm,
greater fool theory. It's just that things get to their proper value and you can make money. But in sectors, I like the manufacturing. I like recycling, which is really an interesting thing about the new iPhone from Apple.
right.
If I understand it right, this iPhone has some rare earths in it. Where will Apple get these rare earths from? Recycled,
Hmm.
gotten from old technology that people have
Mhm,
thrown away. And so the recycling, I think, is really a big growth area. And of course, the AI, and where the AI meets manufacturing, and not just manufacturing, but even services, which is going to come from this. How much can we do that we think are services that computers can do? I
mhm,
saw this one noodle shop outside of Tokyo
uh-huh.
that was all run by robots. I mean, what's noodle soup really, right? So you got the pasta, you put in some hot water, some flavoring. It doesn't seem all that complicated, but even the order would be given to a mic. You'd be speaking your order into a microphone, and the robot would make it and would
Mhm.
deliver it. Another robot would deliver it to you. So I think
Right.
that post COVID, I think we've seen an acceleration of technology applied to making our lives easier and perhaps even reducing that human to human contact.
you think reducing the human to human contact. So do you think there will be a big shift that's way companies do business post COVID? I mean, what, business travel and meetings and such. Will there be a redirect on that as well?
Yeah, I wonder about that. I mean, I think that what we see is so much is think about the cost to a
Hmm.
business of the travel, and
Hmm.
it's not just the travel, but it's the lost hours. Like when I'm going to go visit a client,
Hmm.
that time that takes me and the cost is one thing, but also that opportunity cost of not being able to do my job at my desk. And
Hmm.
so I think that I think that the emphasis is going to be on boosting productivity.
Hmm.
And then what does make sense? Does it make sense to have a Zoom or a WebEx conference, or does it make sense to be there in person? I do
Hmm.
think that it might be a generational thing taking place as well too, where people like myself might say, what's the point of an hour and a half commute? Let's
Hmm.
work more from home. While people who want to get ahead, I think, who are trying to climb that corporate hierarchy, who have a career in front of them, then I don't think there's going to be any substitute for that face-to-face time with teammates and
Right.
superiors for learning skills and for building that trust of shared values.
Hmm. But so do you think like on a higher level then, not the ones who are just entry, but the ones who are been in the workforce for a while this work from home shift will be more, at least partially permanent.
Yeah, I think that
Because Americans we work very hard and we work long hours. And obviously this pandemic has caused people to reassess and regroup. Do you see that as a long-term change?
yeah, I think that in some ways this is the COVID is sort of accelerating things that I think
Mhm.
were already taking place, and I think uh, before COVID, it's something like a third of Americans could work at from home, and now
Right.
that could be maybe should,
Will.
and now maybe and maybe going forward, it's like well maybe it's like I think businesses will vary from industry and
Hmm.
company personalities and culture, but I could
Right.
see the case for people to be having that flexibility where they maybe like sort of required to come to work, like sort of like at college, having a year on campus out of your 4 years or something. So maybe you expect to work one day a week at the office or something
Hmm.
like that.
Hmm.
But it's still, it's really about the advancing of computers and the ability for the managers for these military kind of terms called C3, command, control, and communication. And
Uh-huh.
I think that this computers and this automation like Zoom allows for a
Hmm.
wider span of control,
Hmm.
a wider span communications. And so I do think that the work environment was becoming more flexible. And now I
Hmm.
think it's going to be more flexible for more people.
Mm. I agree. You had mentioned China before. I just want to touch back on that because I want to get your international perspective on things. But um, obviously, when Biden comes in, how do you think the relationship with China is going to be? Do you think the U.S. is going to take a harder stand with China in regards to manufacturing and trade, or will it be difficult to do that?
Yeah, listen, the election has just happened, and I think that there's so much still, there's a lot of partisanship that's
I think
and the
that's an
partisanship.
understatement, Mark.
Yes. But it tends to emphasize the differences. And so
Mm.
from where I sit, I see a lot
Mhm.
of continuity on those foreign economic policy issues.
Mhm.
I think that the US elite, the political economic elite, uh, want to confront China. And I think that the general belief is that China has gamed the system to its benefit. And that I think this is bipartisan. I think that uh, President Obama had taken, I think, China 9 different WTO cases, and I think he won every case that the U.S. brought that was decided. I
Mhm.
think that the difference between Biden and Trump in terms of China is not going to be so much about substance. It's
Mhm.
going to be, I think, it's going to be more about style. I think a lot of the things that in the last 4 years that sort of sounded to many of us like nails on a blackboard, like the way that China treated Hong Kong, the way it's a bully in the South China Sea, uh,
Mhm.
what it does try to these intimidation techniques to Taiwan. I think
Mhm.
I don't think sets well with many Americans on both sides of the aisle, and so I
Mhm.
think that the confrontation with China, I think. Uh, uh, it hasn't just begun, but I do think that President Trump has sort of given Biden, sort of delivered him a fait accompli. For example, just since the election,
Mhm.
the U.S. has sanctioned 31 new Chinese companies for having ties to the military, which means that we as Americans cannot invest in them going forward. And this is kind of important because if imagine that you have an MSCI emerging market fund, or a fund that tracks the MSCI emerging market index. And in that index is, say, a company called China Mobile, which has ties with the Chinese military.
Right.
And now Americans can't invest in it. And so what happens to that index, and what happens to our performance and our global diversification and this? And so, but what can Biden do? If he comes into office, he can't just simply take them back.
Right.
That would send a dangerous signal of, you make a concession, you need to get something for it in exchange. I know it doesn't sound very neighborly, but I think in real politics, that's what happens, is that President Trump is, say, punishing China. And if we release that punishment on China without having a change in behavior or something, it makes us look weak. And it's not a good signal to send to our friends, our allies, as well as our adversaries. So I think that the approach Biden's going to have is more multilateral. Biden hasn't even been in office for a single day yet, and he sent a powerful signal in this direction. In a call with the Chinese prime minister, he suggested the security agreement with Japan covers some disputed islands that China also claims. Japan administers them. Obama was the first president to grant them, to recognize that they cover under the U.S. security agreement with Japan. Trump never said that, and Biden has already signaled that. And I think that signals, if this was like a game of bridge, what he's signaling, I think, is that one, he's willing to work with U.S. allies to confront China, and that he's not going to be. I think that some people criticized him during the campaign for being sort of soft on China, but the way I would read it is that the criticism of the Democratic Party to Trump's position on China was not that it was too hard, but it wasn't effective. And so I think that the effectiveness is not just about the trade balance, but it's about the human rights for the Muslim within China, for how it treats the Tibet. And so I think that the U.S. confrontation with China is much bigger than the U.S. president, but it's sort of just shaped, and the style of it is influenced by the president.
Okay. What I'd like to close up is, what is your feeling about the U.S. economy in the next year or so? Where, are you optimistic, pessimistic, realistic? How would you define, what do you see happening in 2020?
Here's what I sort of see is this has been an incredible year for us. As you know, we had a record collapse of the economy in the second quarter, a big bounce back in Q3, and now I think we end up towards, at least in the next 2 quarters, that's Q4 this year, so that we're halfway through or so, and Q1 of next year, it's still going to be tough. That is to say, growth could be solid, but not the kind of spectacular growth we saw, and not nearly to our potential. We'll still have high levels of unemployment. Unemployment is sort of like the fast twitch and slow twitch muscles that we have, right? The fast twitch muscles, we all got hit with the shock, a huge jump in unemployment. The fast twitch muscles came back quickly. Those are the manufacturing jobs, like you're talking about, auto sector, for example, other manufacturing. But the slower twitch muscles are businesses that might not come back. And these are a lot of the small businesses that service us, whether it's for food or getting our nails or shoe shines. These services are being squeezed, and I think that that's going to take them a while longer for those people to find jobs and be reabsorbed into the market. But I think that maybe the beginning with the second quarter of next year, and the third quarter, I think those could be very strong quarters for us, because I would expect, of course, we still don't know what happens to the U.S. Senate, but I suspect that we will get a fiscal stimulus package in the first part of next year. And by the time the politicians approve it and everything, we're probably looking at early Q2, and that should set us up for maybe 6 months of better growth before coming back down to mean reversion, should say, by the end of the year.
Well, Marc, thank you so much. I really appreciate your insights, and I'm sure everybody else will. I'm delighted to welcome you again to the Bellringer, and I look forward to hearing more from you in the next year.
Good, thank you. Good luck to everybody.
Thank you.